Welcome to our 2023 webinar series. Each month you'll learn about insurance solutions you and your clients can consider, plus the significant impact to insurers and their post-pandemic strategies. Each webinar will last about 50 minutes, and you must be logged on for a full 50 minutes to receive CFP credit. Please be sure to ask questions as you have them by typing them into the questions box. We'll answer all questions at the end of the presentation. Today's webinar is being recorded and will be posted on our website within a week in case you missed it. Under the handouts, you can receive a PDF version of the slides if you want to follow along. Today's presenter joined LLIS in 2005 and has paved her way to covering various types of disability and critical illness insurance. Here to present on what is blooming in disability insurance is Kathy Bilodeau.
Thanks, Claudia, and thanks all of you for joining me this afternoon. Some of you may know this already, but May is Disability Awareness Month, hence the reason our topic is disability insurance. It's also a month where flowers and plants start to blossom, so get ready for me to be your tour guide of the garden bed of disability insurance. Okay. And Sorry for the delay there. Today we will be unearthing all the benefits of group insurance, which includes life, short and long-term disability, dental, vision, accident, critical illness, and also indemnity. We will also be rototilling through individual disability, which will include RAP or GAP or supplemental, depending upon what term you use. We'll also be talking about some other plans such as the new professionals program, the student loan protection rider, and also the retirement protection rider. And for the business owners who I think seem to be neglected in this garden, we'll be mulching that garden today for business owners. And finally, we'll be unveiling how hardy critical illness is. It has some great roots and has bloomed where it has been planted. So why is group insurance offered to employees? Well, first of all, it provides a way to attract prospective employees to a firm. Secondly, the group insurance that you can provide is a lot more cost efficient as a group than it is as an individual. So it's kind of like the law of large numbers. The larger number of people you have and the larger number of premium, the easier it is for the insurance company to pay those claims. And then lastly, with 10 lives or more, there is limited underwriting, almost no underwriting. It's pretty much a guaranteed issue. So if an individual who cannot get disability insurance, maybe a decline through individual disability, or there were a lot of restrictions on the riders and the features because of maybe a health issue, we can get them coverage through group. So this way we can get them covered and we're covering the rest of the employees in the firm. So there's a lot of benefits to group insurance. Sorry about that. That was a repeat. So when we talk about group insurance, we're talking about a plan where everything is done electronically. So in other words, the quotes are done via email, the setting up of it, everything can be done electronically, and even futuristically, any billing, adding or subtracting of employee is all done electronically. Now for me to run quotes for a group disability plan, the information that I need is the name of the company, the location, where are they headquartered, what the industry is, so we have an idea how to underwrite it. And then in terms of the employees, there is a special census sheet that I could send. And essentially, we're just going to get a list of all the employees, their dates of birth, where they live, how many hours they work, occupation, things like that. And then that's what we need in order to prepare a quote. Right now, we don't have a formal quote request for group insurance on our website, so that's why I'm kind of giving you an outline of what we need. Feel free to email me, and I can fill in the gaps for you. So when we talk about group insurance, I think this is great news. We can go down to as little as 2 lives. Obviously, if we went down to 1, it would be a group, it would be an individual. So going down to 2 lives gives us a lot of wiggle room to cover a lot of groups. Now, the less people in the group, the more underwriting there is. More people in the group, like I said, the law of large numbers, less underwriting is involved. So when we talk about life insurance, we can go down to as little as $10,000. But we can go higher as well. So it just depends if you want to do 1 or 2 times salary. I think the maximum is about 300,000, but it's going to depend upon the nature of the group, how many people, as to how high we can go in the life insurance. We can also do voluntary, where we cover dependents, so spouse and children. We can write life insurance on them as well. With short-term disability, for those of you who aren't familiar with it, it's a weekly benefit. So we can go from 40 to 66 and 2/3% of someone's salary, up to a maximum of $2,500 a week. So you can pick between $250 to $2,500 a week. So that if someone were to become disabled and is going to be out for a short period of time, we could cover that. Most of our short-term disability is designed to segue into the long-term disability. So when we're looking at these benefit periods, 13 or 26 weeks, what we're talking about is essentially 3 months or 6 months. The elimination period is much shorter. We're looking at 8, 15, or 30 days. And these elimination period days apply to both an illness or an injury if someone's designated as having a short term disability. If by chance they recover, that's fine. But if they don't, it will segue into the long term disability. And the long term disability does the exact same benefit amount, 40% to 66 and 2/3. But long term disability is paid on a monthly basis. So you can get as little as 2,000 or as much as 10,000. Now what we normally do is 60% to $6,000 a month. That's pretty much our standard, but we can change it depending upon the complexion of the group. Most of the time with the short-term disability, we're doing about $1,500 a week. So I think there again, it's 60% to $1,500 a week for short term, and our average, like I said, for long term is 60% to 6,000 a month. You can choose the benefit period, 2 years, 5 years, or to age 65. The elimination period is 90 or 180 days. Now, those of you who are familiar with the own occupation, we're going to talk about this probably 3 times, but the own occupation rider is built into our group long-term disability for approximately 24 months. If you want it to go longer, we can go from as little as 1 year to 5 years. So just keep in mind the rates for group insurance is based upon the number of bodies and how old they are. Okay. So there are some features or what we call riders that can be added to the group plan. This is just a sampling of some of them. If you have an individual who is working partial time because they're partially disabled, they can get a child care benefit of $100 to $800 a month to help watch their children. There is a medical premium supplement that will help pay the employees' COBRA premiums while they're disabled. COLA, which stands for Cost of Living Adjustment, this just increases that monthly benefit year after year so that it's not remaining stagnant. It is keeping up with inflation. If an employee is disabled and is no longer able to help pay for their children's college education, this rider is available to help offset those costs. And then lastly, there is a conversion privilege. So if you have an employee who is leaving the company and wants to take some long-term disability with them, they have the option to convert it into a individual policy. So in addition to the life, the short-term and long-term disability, we also have dental and vision available. This is if it's an employer paid, we can go down to as little as 2 lives. But if it's voluntary, meaning the employees are going to pay for it, we need at least 5 employees to be purchasing the dental or the vision. Both of them have a nationwide PPO network. You can cover dependents. It has a rate guarantee of 1 year, and it can be employer or employee paid or a combination thereof. In addition to the dental or the vision, we also have accident, critical illness, and indemnity available. It's the same situation, covers dependents. The indemnity is a new one, and the only way you can get this is if you take two of the others. So if you're taking the accident and critical illness, it will also be added to it. And then if two of them are taking, I'm sorry, indemnity if you're taking one other. The health screening, if two of the above are taken, this is automatically included in it. And the health screen is really like if you have an employee needs to go for an annual exam or a mammogram, a colonoscopy, those kind of screenings, those would be covered with that particular plan. And there's no fee for that. So some great things with group insurance. So In addition to, what's available, I wanted to touch on underwriting. So when we have 2 to 4 lives, the employee actually has to fill out a small questionnaire, and they have to provide medical and physical information, physician information, excuse me. When we're talking about 5 to 9 lives, it's really more the employer having to fill out a form, and essentially the employer has to um, let us know if there is any employee that has been out of work due to illness or injury for at least 5 consecutive days in the last 12 months, and if they know of any employee or an employee's dependent, if they're going to be covering the dependent for insurance, if they've been diagnosed as having any of these conditions. And obviously, you can tell, cancer, heart disease, these are some serious conditions. And what we call these are the knockout questions. So there would be some concern if we've got like 5 or 6 people with these types of conditions. So this would go into the whole underwriting process as to whether they would be covered or not. And then lastly, when we're talking about 10 lives, this is essentially a guaranteed issue for most of our companies because there's going to be enough premium there to support claims. So with group life, if you have a company that purchases group life insurance, they do get some free services, and they're provided by AXA Travel Assistance. And what AXA does is it's kind of like a company that provides coverage for if someone's like, let's say they're traveling overseas and their things are stolen, or they have a medical emergency, or they're having a language problem trying to communicate. They're available for all these. And then obviously before you take your trip, they can do some research for you. What are the cultural things that you need to know, precautions? Again, when you're traveling overseas, this is really important, but it can also be for local travel as well. In addition to that, they have what is known as a will and legal document center, and this is through a company that they outsource. I actually went in and did this, and essentially what it is boilerplate templates for these types of agreements. So when you look at them, you put in the state that you reside in, and then all this information comes up, all the legalese, if you will. But then you have an option to tweak it and say, hey, I want my third cousin to get my diamond anniversary ring. You can put in there any stipulations about, I want to give all my body parts away except for my eyes. So you can pretty much tell it whatever you want it to do. And that's available to all the employees who are purchasing life insurance, or if an employer is purchasing life insurance for the group. When we talk about group disability, they also have some great services available. And I think the employee assistance program was one that was used quite a bit during the pandemic, because what it is it's a service where if someone's having anxiety, depression, or some sort of mental issue, any kind of health or wellness, or they're dealing with elder care, they're dealing with taking care of a child, raising a teen, any tips on parenting, all this kind of stuff, you have access to a counselor or a therapist, a mental health professional, whatever you want to call it, 24 hours a day, 7 days a week. And this is just, again, a really nice perk that is built into the fact that the employer purchased disability for the company. Another service that they provide is discounts. So this is not insurance. This is a discount for laser vision, hearing aid, vision care, dental health, and beneficiary support. So again, these are all perks that are provided free of charge when group benefits are purchased by the employer or by the employee. So we've just unearthed all the pluses of group insurance, but it does have some shortcomings, which is why we also recommend individual disability insurance if the client is eligible for it, along with their group insurance. So we always want to take a look at both, but especially if they don't have coverage at all. So if you have clients who work for an employer that does not provide any type of short or long-term disability, it's really important that we take a look at what we can provide for them. So let's get ready to rototill through individual disability insurance. So why is individual disability a good option? Well, the Council for Disability Awareness surveyed 1,000 people in 2014, and this is what they learned. 67% of the people cited income as important, but only 28% believe it's crucial to have insurance to protect it. In addition, 50% of those that were surveyed said they would tap into their savings or investments to pay bills, something that you advisors probably would not want to see happen. However, 57% they only had enough money to pay bills for 6 months or less. So obviously, it couldn't be a very long disability. And one-third of those indicated they were more likely to consider obtaining coverage if they knew more about it. Hence the reason we're having our webinar today. Also, when I read through the survey, it looks like the older the person becomes, the more important it is for them to get disability insurance and the more likely they are to purchase it. So when you're looking at some of your 20 and 30-year-olds, they may not think of it because they're invincible. They don't ever think anything's going to happen to them. But as they age, particularly when they start having children and they see their parents aging, they realize maybe this is something I need to look into. So why else do we supplement group disability? Well, again, what are they going to do if they become disabled? So if your clients are fortunate enough to have access to insurance, that's great because, they, like I said, they can access their emergency fund, which could be as long as 6 months, but like they said, probably not. If they have individual or group, they can immediately file a claim through them. But how else are they going to pay their bills? They can file for Social Security. Social Security disability takes on average about 3 years to get a claim through. And if it's approved, it's probably going to take an attorney to help get it approved. And also, the average benefit is about $1,200 to $1,500. So if your client can't live on that, they better have a backup. They can borrow from relatives or friends. Don't know how long that's going to last. They might have their spouse work extra hours to help make up the shortfall. And last but not least, we could always do a GoFundMe. So, what I want to talk about right now is what I think is probably the most common that we hear that Brian Taylor and myself deal with is looking at a client's group policy. And what I want to tell you here right now is if someone tells you, oh, Mr. Advisor and Ms. Advisor, we don't need to talk about disability because I have it at work, that is a big no-no because they have no idea most of the time what they have. They just know they have it, but until we actually take a look at it and analyze it, that's when we feel that the shortcomings will come out. So, first of all, WRAP. So we just meandered through the pathway of group insurance and all its benefits, but we believe that it's most important to have the hardiest disability protection as possible by layering over it, wrapping around it, or finding the gap. These are all terms that you'll find in articles or people discussing supplementing disability insurance. When we wrap around it or we just provide individual disability because someone doesn't have anything else, there are special programs available to individuals depending upon where they are in their career path. So when I mentioned earlier, we have one for new professionals program, we have a student loan protection, and we have retirement protection. And we're going to go into those in greater detail. Also, when you're looking at individual, you get to pick and choose the special riders and the features, whereas with group, you don't. You can choose your monthly benefit, and you can choose your elimination period. And it's not offset by Social Security disability. So whatever amount that you get approved with individual disability, it doesn't matter if you applied for Social Security disability. You can get that amount in addition to this. So before we jump into the designing of an individual plan, I want to weed through what is needed to prepare quotes. We will go into the habit of smoking a little deeper on the next slide, particularly marijuana. So as you well know, if you've ever gone on our quote request, we ask a ton of information. But this is really the crux of what we need. We need to know the name of the client or whatever name you want it saved under so we can find it in case you ask for it in the future. We need to know the client's date of birth because obviously age is one of the key factors, and also sex. Males and females pay a dramatically different rate for disability insurance. On average, between 20 and 45, females are going to pay approximately 75 to 78% more for disability insurance. And that's simply because our plumbing allows us to have a baby. So a lot of claims for pregnancy and maternity. People always ask me, well, after that, do the rates go down? Well, once a woman reaches the age of about 45, the rates go down to about 35 to 38% higher, but they're still going to be higher because we still have all that plumbing and there's so much that can go wrong with that. So that's just a fact of life. If we ran quotes, and you're going to see it in one of my case studies, I did it for a female just so you could see what the difference is. We also need to know the state of residence. Rates vary from state to state, and the guidelines for what is allowed for disability insurance can change from state to state. With regard to smoking status, we need to know, do they smoke cigarettes? Are they smoking a cigar once or twice a month, or one of those celebratory cigars, maybe once or twice a year? Are they chewing tobacco? Are they using nicotine gum? Whatever the case may be, we need to know what's going on with the nicotine. Income. Obviously, when we're purchasing disability insurance to replace lost income, income is going to be one of the key features. And with income, lots of times it might be the last 2 years' tax return. It might be a year-to-date pay stub. It might be a W-2. It just depends upon what the situation is. Next is occupation. I can't tell you enough how important it is to get details. And on our quote request, we do ask for some details with regard to occupation and duties, because there's so many generic terms for occupation. You could say that you're an executive, but you're really, and you call yourself a CEO, but you're a one-man shop working out of your basement. We need to know what your actual duties are, where you're working. Are you working in an office? Are you working from home? If you're a project manager for a construction company, do you always stay in the office or stay at home, or do you ever go to the construction site? We need to know specifically where you're going and what you're doing, and how much time you spend doing it. And then lastly, to the point we just made about the group insurance, what other coverage do you have? Do you have group insurance? Do you have individual insurance? Do you have association insurance? So anything that you can provide to us, because insurance companies look at all the coverage that a client has and will give them about 60 to 70% of their gross income. So that's why they need to know. They don't want to overinsure someone, so if they ever go out on claim, they're better off staying on claim than they are going back to work. There's no incentive for them to come back to work. Okay. So I told you we were going to talk about smoking. So with smoking, particularly marijuana, it has to do with the frequency. So and how you're doing it. So if someone's vaping, that's looked upon not as nicely as someone who is taking something they're ingesting, edibles. So we're going to worry about the method and about the frequency. If it's once a week or less, it's considered non-tobacco rates. If it's more than once a week, we're going to go to tobacco rates or a decline. Now, with tobacco rates, disability, it's a little bit more forgiving because the rates will only go up by 25 to 30%. The inverse of that with life insurance is they could go up 200 to 250% more. So, like I said, a lot more wiggle room for smokers with disability. Now, I want to go over this because, like I said before, if you have a client who says, oh, no, we don't need to talk about disability, I've got it at work, this is what you need to pull out. And this is on our website. It can be found at our advisor tools. And when we're talking about group insurance, I think it's really important that we cover this in great detail and all of its wonderful benefits. So let's hoe through the shortcomings of group insurance. This was designed to compare side by side. So when we're talking about the monthly benefit, like I said before, the owner of the company will determine what they want. So if it's going to be 60% to $5,000 a month or $6,000 a month or $10,000 a month, the employee doesn't get to pick and choose that. Whereas on an individual, they can pick and choose how much coverage they want, okay, as long as it's within the guidelines. In addition, when we're talking about group, bonus and commission generally are not included with group insurance, even though it's part of their earned income. With individual, we can cover any kind of bonus and commission that's included in their W-2. Taxation, as I mentioned before, if it's paid for by the employer, it's considered a taxable income. So in other words, what will happen is the client will get their full benefit every single month, but at the end of the year, they're going to get a 1099. When an employee pays for the benefits themselves, then it's tax-free because they're paying for it with after-tax dollars. Also, the definition disability, I mentioned with group, we can get that own occupation definition, which is if a client can't do the substantial material duties of their occupation and they choose to, they don't have to, but they choose to work in another occupation, they can collect 100% of their disability benefit plus 100% of their income from their new occupation. That's only going to be good for 2 years most of the time with group. With individual, we can get that to go to age 65, so there is no limitation. Elimination period, we talked about that. Most of them are going to be 90 or 180 days. The employee doesn't get to choose that, but when they go to individual, they get to choose their elimination period. When we talk about non-cancelable and guaranteed renewable, that just means that with the individual, as long as they pay the premium, they have to renew the policy every year. And non-cancelable means that the premium can't change unless the client does something to affect a change. So they make a change and increase the monthly benefit, then the premium's going to go up. With the group, that's not true. The group insurance carrier can pull out and tell the employer, hey, we don't want to do business with you anymore. So it's not guaranteed. With riders, you can pick and choose the riders, and then you can design on the individual which ones that you want, which ones are applicable to you. Convertible simply means that if they can convert it from a group plan to an individual. With the individual policy, it's already individual. And portable means, can you take it with you? No. With the individual, depending upon, where you move to or what occupation you change or what employer, doesn't really matter. It's going to go with you across the country to any employer. So those are some things that you probably need to just be familiar with before you sit down with your client and you start to delve into the nuances of group versus individual. So here is a quote that we created for Jim, and it kind of gives you an overview of how we wrap or find the gap or supplement his long-term disability. So Jim is 41. He's a software engineer, and he's making about $225,000 base and $18,000 bonus. And in this example, we're using a 25% assumption for tax. So his monthly gross income is $20,250. His take-home after 25% tax is $15,188. He does have some group insurance of 60% to $15,000. His take-home after the taxes is $8,400 because, like I said, he'll get the full amount, but he's going to have to pay taxes on it. So, looking at that, the coverage that he currently has, we were able to layer over or wrap or find the gap and provide $54.54 more of monthly disability benefit, tax-free, because he's going to be paying for it with after-tax dollars. When you combine the $84.38 that he's going to be getting from group plus the $54.54 on the individual, that comes out to $13,892 of monthly benefit, which gets him to 91% of his take-home pay. So, most of the time when you show this to them, they're going to realize, wow, as opposed to taking $8,400 home after being used to taking $15,000 home, wouldn't you want to have the $13,000 instead? So if you have any questions on this, let us know. This is where we can help you out and run the appropriate quotes. Now, as I mentioned earlier, there are some special programs that disability insurance carriers have come up with, and they're designed for specific situations. The New Professionals Program is for people who are still going to school, trying to extend their education because of a particular career path. And normally they wouldn't be eligible for very much because if they're still going to school, or like if they're a resident and they're only making $50,000 or $60,000, they won't be eligible for a lot. So what the insurance companies have done is said, you know what, we're not going to do it based upon income. So when we're looking at the New Professionals Program, they don't look at any kind of group insurance. They don't look at any current income. What they're going to do is they're going to base it upon a specific benefit amount depending upon where they are in their career path. In addition, we also have an insurance company that will give a graded premium. which means that it's 43% lower than a level premium because they realize if someone's only making 40 or 50,000, they may not be able to afford a full-blown disability policy. So what we're going to do is we're going to knock the premium down, and then every year it's going to go up little by little. But then once that person launches into their anesthesiology or cardiology or engineering, we can circle back to them and remind them we need to convert that graded premium into a level premium. So July is traditionally the month of matching residents to hospitals or residents graduating. So this is why we wanted to make sure we point this out in May so that you can get going on this. But this is just an example of what the benefits are available to certain occupations, and these are designated by the insurance company. So with these two, the top two, the medical fields, they'd be able to get anywhere from 5,000 to 7,500. When we're looking at an engineer, 1,500 to 4,000, and then with a pharmacist, anywhere from 2 to 4,000. So again, they're not going to look at their income. They're just going to look at where they are in their career path and what they would be eligible for. They still have to go through regular underwriting, medical underwriting, but no financial underwriting. So let's rake through the riders that we can attach to a disability policy. I mentioned this again, own occupation. We certainly want to have this rider on when we have a professional. The own occupation rider, again, is the rider that says that if the client cannot do the substantial and material duties of their occupation and they choose to work in another occupation, and they can still collect 100% of their disability benefit and 100% of the income from their new occupation. The residual disability rider is something that we would also want to put on it. This is a rider that says if the doctor doesn't deem them totally disabled, that they can work in some capacity, maybe on a part-time basis. This would allow them to dip into the policy to help make them whole. The COLA, or what we call the cost of living adjustment rider, this is the one that only kicks in when the client is on claim. So again, there has to be a mechanism to increase the monthly benefit. So if someone has a monthly benefit of 5,000 and they're going to be out on claim for like 3, 4, 5 years, you don't want it to remain stagnant at 5,000. So with the COLA rider, most of it is going to be 3%. It will increase the monthly benefit by 3% compounding while they're on claim. The catastrophic, or what we call CAT, this is a rider that is paid on top of the regular base benefit. And what it does is it simply says that if someone has lost 2 or more of their activities of daily living, or perhaps they suffer from dementia or Alzheimer's, or perhaps they've lost an arm and a leg, or the ability to see out of both eyes, hearing out of both ears, or the ability to speak, all those would be a trigger. They would be eligible for an additional monthly benefit on top of their base benefit. The future increase options, these are ones that, especially for new professionals, this allows them to increase their monthly benefit as their income is going up. And this is with no medical underwriting, just financial. And because these people are launching into new careers, so let's say, we've got someone that's launching in July, they're graduating or from residency into, their career path of being a cardiologist, they will allow them, instead of having to wait 1 or 2 years to increase their monthly benefit, they can do it within that first year, knowing that they might have been making 60,000, and then 4 months later they're now making 300,000, and we need to adjust as quickly as possible. They will allow that. Okay. So here's our case study. This is Corey. He's 29. He's a first-year resident, so his occupation class would be a 4P. And his specialty is cardiologist, so that's always something that we need to know. So when you fill out the quote request and you put physician, we need to know what type of physician they are, because the occupation class is determined by that specialty. So that's why I put this on here. So he's making $50,000. Before I show you his quote results, I also want to talk about student loan. So as you may know, with some of your professional clients, they may have student loan debt that they're still paying off. I know that's been in hold because of the pandemic. But disability companies recognize that there has to be a disability solution that can serve 2 purposes. One, where they're replacing the income to pay their groceries, to pay their rent, to pay their mortgage, but also not trying to pull money out of that monthly benefit to pay off their student loan. So they came up with a rider that will pay off the student loan. And this, what this does is it says that the client can have a student loan that's either for an undergraduate or a graduate degree. It can be a government backed or a banked backed loan. It can't be an individual like, okay, grandma gave me $10,000. None of that. And it can reimburse for $500 to $2,500 if it's one of those advanced degrees, a master's or something above that, doctor. Um, if it's an undergrad, it can be $500 to $1,000. Okay. The duration, if you're between 18 and 40, you can choose between 10 and 15 years to pay it off. Or if you're 41, you got started late on your career path, it's limited to 10 years. The elimination period can be 90 or 180 days. It's only a level premium because it's so cheap to begin with that there's no way they could afford it, to put it on a graded. And then it's reimbursement. And by reimbursement, it simply means that the client would have to pay the first loan payment, get reimbursed for it, and in theory, they take that and they would pay the next month. Or in some instances, they can assign the benefit directly to who is ever holding the loan. In addition, if they pay the loan off early, they win lotto or it's forgiven, we can just cancel this rider. Okay, so it isn't something that they have to keep forever and ever. So let's go back to our case. Corey, he was 29. He's the first year cardiologist, um, first year resident cardiologist, and he qualifies for $5,000 a month as a resident. So we put all the usual riders on there, and his premium is $2,091. Now, if he was a female, his rate would be $35.87. So the female would be paying about 71% higher premium just because she's female and she's 29 years old. Okay. So we all know that as advisors, you're responsible for making sure there's enough funds available for your client to retire comfortably. But to do that, you have to rely on what? The client working, the client earning an income. But what happens if they stop working and therefore the income stops too? Well, retirement protection is designed for this type of situation. What it is a separate disability policy, and in the event the client becomes disabled, hopefully they have their own individual disability or group that's going to pay them a benefit to pay their rent, pay their mortgage, or pay their groceries, car loans, whatever the case may be. With the retirement, it's dedicated simply to replacing lost money that would have gone into an IRA or 401k or whatever retirement plan they have. And what it is it's a trust, and the money's put into trust, and you would help them pick out the funds once they become disabled, and every month there would be that monthly benefit being funneled into those funds. And at the end of every year, because this is non-qualified, they would get a 1099 for any investment income, capital gains. They don't pay taxes on whatever they put in, but anything that's earned on it. And essentially, if they stay on claim, they would be getting this benefit pretty much tax-free because, like I said, they would be getting a 1099 and paying taxes on it. At any point in time, if they want to, with some companies, they can roll this back into any non-qualified vehicle they have if they come off claim. So here is an example. We have a case study with Brianna. She's 44 and she makes $265,000, and she also has 60% to $10,000 of employer paid group. She's an attorney, so we were able to get her $4,800 a monthly benefit for disability, all the right features. And then for retirement protection, completely separate from her 4820, she would have 3365 going into investments to replace what she would normally maybe be putting in her 401k from her work. And that premium is $1192. So $2,700 for the disability and $1,100 for the retirement protection. So before we transition into business solutions, I wanted to unearth some special features on disability policies with some of our carriers. The first one is Guardian. So Guardian has what is known as an unemployment waiver of premium rider, and what it does is it waives premium for 12 months if a client is unemployed and receiving unemployment compensation for at least 60 days. And this is just a rider that I think if someone's in an industry that has a lot of turnover, this might be important for them to have. Principal has a rider that is called the Supplemental Health Rider, and this provides a one-time lump sum. So basically, for 6 months of disability benefit, um, they can collect benefits in the event that they, in addition to what they're already getting if they're disabled, if they had coronary artery bypass graft surgery, cancer, or stroke. And then Standard has one that has become pretty popular. It's called the Family Care Benefit Rider. And what this does is it provides 6 months of monthly benefit, but it has nothing to do with the client being disabled, but more so if they're losing 20% of hours and 20% of income because they're taking care of a family member, whether it's a mother, father, sister, daughter, sibling, stepson. Um, you know, they can collect this for 6 months, and they do have to satisfy the elimination period, and they can claim this 2 times during the life of the policy. So we meandered through the garden of group and individual. Now we're going to mulch our way through the neglected bed of business solutions. So a company called Dynata conducted 1,000 people survey online, and it was just done in January. So this is fresh information for one of our company's principals. The people that were surveyed had to be 21 years or older. They had to be employed full-time, part-time, or self-employed. And if they were self-employed, if they were a business owner, they had to have at least 5% of the company ownership, and they had to be actively managing the business, and it had to be a company with at least 2 employees, but no more than 500. So this kind of gives you the parameters. So what they learned was 52% thought that business protection, meaning safeguarding integrity, cash flow, and value of their business, was their number one priority. So that's good to know. Two-thirds own a family business, of which 44% said they would give the business to a family member. Not about buying it, just giving it to them. And then business succession was the number 4 priority. So, we were in the top 5, which is good to know that people are thinking about what would happen if something were to happen to one of the business owners, maybe one of the key people. What plans do they have in store? So there are essentially 4 types of protection for business in the event of a disability. There's business overhead, there's business loan, there's key person, and lastly, there's disability buyout. And we're going to go into a couple of these pretty deep, and then we're just sort of skimming over a couple of them just because of time. But let's talk about business overhead, which allows the business to continue operating smoothly when an owner is too sick or too injured to run the business. Essentially, it provides a monthly benefit to the business owner so that the business can continue to pay their bills and keep the business operating. So again, if a business owner has their own personal disability plan, then he would be collecting the benefits to pay his mortgage, pay the groceries, college tuition, whatever the case may be. But independent of that, there would be a monthly benefit to pay the salaries of the people in the business, to pay the rent, to pay for office supplies, whatever the case may be. And in order to gather this information, this is a tool that can be found, or a worksheet that can be found on Advisor Tools. And if you complete this, the specifics of this is that each one of these expenses are already approved. So we only put on here expenses that would be eligible for reimbursement for the business overhead. So keep in mind that it must be a deductible income tax. Okay. So again, the client would fill out a disability quote request because we're going to need all their background, but then independent of that, I would need this completed. Okay. So here is our client. He is Stephen, financial advisor, much like all of you. He does have people working in his office. He's 31 and he makes $75,000 and he needs a $10,000 monthly benefit to keep his business going. When we do these types of policies, we want a small elimination period and not a very long benefit period because obviously if they're not going to be coming back to work, we don't want this lingering out there. So for him, the annual premium was $1,300. So this gives him peace of mind that in the event he becomes disabled, he can keep the doors open on his business. Now, business loan protection is usually piggybacked onto the business overhead, but we can also zero it out, meaning if someone doesn't want business overhead and they just want the business loan protection, we can do that as well. And I think one of the great things about the business loan is If you go to a bank and you tell the bank that you're going to be purchasing this can tip the scales so that the bank says, okay, we're willing to give you a loan. And or, if someone does become disabled and knows that they have this business loan protection, it can protect their credit rating. So I think it's just a win-win all the way around. And I think it gives someone peace of mind that there is a safety net in case something happens, that loan can be paid. So here's our case study. This is Craig. He's a dentist, and he took out a loan for $650,000 to buy an existing practice. So his monthly benefit is $65.80. And again, we want a small elimination period. You don't want that loan to go unpaid, and a benefit period of 10 years. And it can be canceled if it's paid off early. And his annual premium is $3,089. So the two remaining types of policies for business are key person and buyout. Key person is if there is an integral person in the organization, let's say it's a salesperson or maybe a tech person, anyone that's considered really important to the company, and if something were to happen to them, it would have a negative impact on the company. So in this case, the company would buy an insurance policy called Key Person on the individual. And in the event that person becomes disabled, the benefit is paid to the employer, and the employer can use it to replace lost revenue if it was a salesperson, or maybe use it to hire an executive search company to replace the chief technical officer, whatever the case may be. So it's up to them how they want to use it, but that's the purpose of Key Person. It does not go to the insured. It goes to the company because the company is considered the insured. And then disability buyout. This is a plan where all the owners that own at least 10% or more of a company need to participate in it. And this allows them to, in the event one of the owners becomes disabled, they have the money to buy out the disabled owner's share of the business. And that's important because if you have a business owner that wants to be paid out, in like 8 or 9 months, and the business doesn't have that cash accumulated, it's very difficult for one of the owners to go to a bank and say, hey, one of our key people is disabled. Will you give us a loan to buy him out? They may not want to do that. And the disabled person may not want to wait 2 years while the company accumulates what they need in order to buy him out. So this is a way for everybody to level the playing field because they're all going to have the coverage. So in case one of them does become disabled, the money's there to buy out the shares. Okay, so we've unearthed how group insurance can cover several employees. We rototilled through how individual can be grown the way a client wants, and we mulched through the neglected garden of business owners. Now we're going to learn about the roots of critical illness and how it has blossomed through the years. So critical illness, the roots of it are that it was created by two heart surgeons in the 80s. And the reason for it is because they noticed after doing heart transplants, their patients did not thrive. And the reason for that was because they recovered physically. Obviously they got a new heart, but financially they were wrecked. They hadn't worked, their bills were accumulating, they're out of work, and they just didn't thrive after that. So these two heart surgeons recognized the need, and wasn't an insurance company, but actually the two heart surgeons that came up with the idea for critical illness to help patients recover financially after having heart surgery and going through that recovery process. So what can critical illness do for your clients? Well, first of all, it's paid directly to the client. So it's not something that we have to worry about paying bills, to a company. And it can be paid in addition to any other coverage, such as health insurance, Medicare, Medicare supplement, long-term care, disability. So literally, we can layer this on, and they don't really care if they've got coverage somewhere else. It can be purchased in addition to long-term care or in lieu of it because it will pay if you lose activities of daily living. It can help pay for COBRA premiums. So obviously if someone's out on disability, they still need to have their health insurance paid. So this allows them to help pay that. You can use it to pay mortgage, medical bills, groceries. You can go on vacation. You can pay your children's college. Whatever you want to do with it. There's no edict that says how you need to spend the money. It can also be available to pay for specialized care or treatment. particularly if health insurance isn't paying for it, or if it's out of town and they have to travel and there's additional cost for that. This will help offset the cost for out of state or out of area treatment. And this is important for all of you advisors. It prevents them from having to make withdrawals out of their 40, I don't know, need the 9 removed from there, IRA or 401k. It replaces lost income from a working spouse, and it provides income perhaps during the elimination period of long-term disability or long-term care. So it can be used in a variety of different ways. So now that I got your attention, I'll now divulge the details of it. So the issue ages are 18 to 70. You can have convertible coverage options, and by that I mean you can choose 10 to 30 years or lifetime. If the premium is too expensive, you can actually choose a smaller benefit or a smaller benefit period and then convert it over. And I'll give you the details of that in just a minute. So when you choose the lifetime benefits, some of the carriers will reduce the benefits by at least half at age 70. So if the policy was issued on a client between the ages of 18 and 67, the benefit is reduced by 50% at age 70. If the policy was issued to a client between the ages of 68 and 78, then the benefit is reduced by 50% after the policy has been in force 3 years. So at least it gives them a little bit of time. And you can convert the policy, like if you did a 10-year and you want to convert it to a lifetime, as long as you do it between the 3rd and the 10th year, you can convert it to a lifetime benefit with no medical underwriting. Now, when they do reduce it to a 50%, the premium does not change. So they're still paying for, a higher benefit, but they're just not getting the benefit of a lower premium. So the benefit amounts are $5,000 to $500,000. Guaranteed renewable and non-cancelable. This is the same as disability. As long as you pay your premium, they have to renew it. As long as they don't do anything to affect a change in the policy, the premium is locked in. They do have some return to premium options. They have some additional riders that can be added to it. And it can pay more than once if there's 6 months separating the diagnosis. And I'm going to give you an example of that later on. And then it also can cover the insured, spouse, and children. And what I found is if you are going to cover a husband and a wife and they're close in age, it is more economical to make the wife the main person and put a rider on to cover the male spouse. So when we talk about benefit amount, the benefits are eligible are based upon earned income. So even though they have 5,000 to 500, they are going to look at earned income. So you can get up to 6 times your earned income. If we have a high wage earner, which is generally what we're looking at, that's concerned about the stay-at-home parent or stay-at-home spouse, and if something happens to them, what are they going to do? They can't take off of work if they're a doctor and take care of the house and take care of the kids. So they want to make sure that their non-working spouse has coverage. So they can get up to $250,000 of benefit for them. Now, another feature is if one dies of any cause. So if someone's a critical illness policyholder and they die of any cause, all their premiums minus the benefits paid, if any benefits were paid, if no benefits were paid, all the premiums will get paid back to the beneficiary. So you get your money back. And if they're a policyholder and they died of one of the covered illnesses, which we're going to go over, all the benefits, not the premiums, but the benefits paid minus any benefits that were paid previously, and this will make sense in just a minute, will go to the beneficiary. So what I mean by that is these are some of the covered conditions. So if you look at the second one, bypass surgery and angioplasty. So if someone has a $100,000 policy, they're not going to get $100,000 for bypass surgery. They're only going to get a 25% benefit. But if they end up dying, like what it said earlier, then they would get the remaining $75,000 that wasn't paid. Okay, so here, and then the non-invasive cancer, same thing. So these are some examples of the conditions that would be paid. And then, like I said, it pays more than once, and as long as there's 6 months separating it. So here's an example where we have a 38-year-old purchased a $200,000 policy, had a heart attack, and got paid $200,000. And then, unfortunately, at age 42, which is more than 6 months separating the two diagnoses, had a stroke, gets another 200,000, and then even more bad luck, has kidney failure at age 57, but can collect another 200,000. So in total, the client has received $600,000, but has only paid the premium for a $200,000 policy. So it's kind of a win-win all the way around. So we have unearthed how group insurance can cover several employees. We rototilled through how individual can be grown in a way the client wants, and we mulched through the neglected garden of business owners. We learned about the roots of critical illness and how it has blossomed through the years. Now, I just want to share a free service that LIS provides, and that is policy reviews for disability insurance. This can be found on our website at Advisor Tools under Policy Reviews. And essentially, what this means is if you have a client or maybe yourself who has a policy and they're not sure if it's something that they should still hold on to, is it adequate? Is it too expensive? Do I need, more coverage? Whatever the case may be, we'll be more than happy to take a look at it. This slide just kind of shows you what we need in order to do that policy review, in addition to the information that you find on our website. Okay, so at this point, I will take any questions that you might have because it's about 5:02 and I wanted to make sure we allow time for questions. Okay, so I have one here. During the group DI slides, all of these group insurance solutions are totally a la carte. Is that right? Or do any need to be purchased as a package? So, good question. It depends upon how many people. So if we have 2 lives, most of the time we need to have at least 2 products taken. But with certain carriers, we can just do standalone life insurance, like I just did standalone life for 4 individuals. So it just depends upon the nature of the company, how many employees. But yes, we can probably do a standalone. They don't, like you said, it's a la carte. There isn't a package deal. Um, how does the Crohn's condition affect the ability to get supplemental disability? So I just had someone ask me that, and we do have a Crohn's questionnaire, which also covers colitis and a couple other things. And what we do is we have access to underwriters, and we send that questionnaire anonymously to the underwriters and get some feedback. But generally speaking, they could get a disability policy, but they would put an exclusion on Crohn's or any other condition that is a pre-existing that might cause someone to go out on claim. Okay, here we go. Why do you need disability and critical insurance separately? What's the high level difference in coverage? Well, disability insurance is basically designed to replace lost income. So every month the client is disabled, they're getting a monthly benefit that can go all the way to age 65. And it's designed based upon income. So we're going to take a look at what your income is. We're going to take a look at what other coverage you have, and then we're going to come up with a dollar amount that your client would be eligible for. Critical illness is a lump sum based upon a specific diagnosis, and it's not going to be ongoing. It's just paid that one time unless they have another diagnosis. And again, it has nothing to do with income. It has to do with you were diagnosed with this condition, so you are eligible for this lump sum, and you can do whatever you want with the money. Okay? Where with disability, it's based on income. Let me see if I have any other questions. Nope, that's it. If anybody else has any questions, feel free to put them in the chat, or you can email me at Kathy Bilodeau, where it says at LLIS.com. And if there aren't any other questions, whoops, I just want to say thank you for joining us. We will have another presentation next month, and I believe that is, I believe that is June. It's the second Tuesday of the month, so it'll probably be June 6th at 4 o'clock. Thank you, everyone, for joining.